In this video, I want to share with you guys what is inside my $8,000 dividend portfolio. Now, you've seen this portfolio in a lot of my videos, especially with the income update ones, but I've never really talked about what each stock I own. So we're going to do just that one, and we're also going to review my goals and plans for this portfolio in 2022. Hey guys, welcome back to the channel. If you are new here, my name is Dred, and I post personal finance and dividend investing videos and pretty much anything related to money. But right now, I am documenting my journey in paying off my student loans. So if you're interested in seeing how everything unfolds or just want to show your support, then please consider subscribing to the channel, liking this video, and also sharing this video. Now with that out of the way, let's get back to the main thing. Before we begin, let's talk about what were my holdings in the beginning of 2021 and how that changed going into 2022. For some stocks, I'll talk more about them because I might have a lot to say, but for some, I'll just go over them briefly because there's not much to talk about. But anyway guys, in January of 2021, these are the 10 stocks that I held in my portfolio. The first one I have is AT&T Incorporated, next is AGNC Investment Corporation, Gladstone Commercial Corporation, Gladstone Land Corporation, Global Net Lease, New Residential Investment Corporation, PIMCO Dynamic Credit and Mortgage Income Fund, Realty Income Corporation, Stag Industrial, and Schwab US REIT ETF. So throughout the course of 2021, these holdings have definitely changed. Some positions I've already closed them, and then some I've added to the portfolio as well, kind of like bringing my total into 15 holdings as of December 31, 2021. Since I grew my portfolio to holding 15 stocks, let's talk about what stocks or companies actually remained in this portfolio. So the first one that remained in my portfolio is AT&T Incorporated, or ticker symbol T. So last year, AT&T made some very big announcements regarding to the changes in their business. But the main thing that AT&T holders were really anticipating about is basically this spin-off of their media business, which is Warner Media, into or with Discovery. AT&T remained in my portfolio even though their stock has plummeted throughout 2021 because I am in that boat of optimism regarding their plans. I believe that their refocus to their communications business, this kind of like improved implementation of 5G, and also this spin-off or media business spin-off into Warner Media will be a good thing for their business long term. While I think that's a good move for them long term, I have come to terms that this is not going to be good for my portfolio. One concern I have though is with their dividend cut when the spin-off is finalized in Q2 of 2022. When that happens, dividend investors who got in prior to the dividend cut will lose out big because of the yield, which is now smaller. Right now, I am at a big loss for AT&T, and I just held onto the stock because I didn't want to lose as much. If prices for AT&T go back to my average price or maybe at least close to it, I'm thinking of reducing my positions to half or maybe even entirely closing the position. By doing so, I will minimize my loss. Plus, I have already quote-unquote milked the dividends out of AT&T before their cut. The next one on my list is Gladstone Commercial Corporation, ticker symbol GOOD, or GOOD. So GOOD is one of those stocks that I really love to have in my portfolio because of the consistent dividends they provide. The stock's price has been stagnant for a couple of years now at around $17, and it was during the pandemic that we saw the stock price soar as high up to $26. And this was primarily so because of their focus into industrial properties, which is a segment that saw growth due to the e-commerce boom. The third stock that remained in my portfolio is Global Net Lease, or GNL. So this stock used to be a monthly dividend payer, but they shifted to paying dividends quarterly. I've held the stock for quite some time now, and I've seen quite big changes in it. GNL holds a very big position in my portfolio, and what really sucks is that they actually decreased their dividends from 53 cents to 40 cents in 2020 due to the pandemic. So the fourth one on my list is PIMCO Dynamic Fund, or PDI. So this stock used to be called PIMCO Dynamic Credit and Mortgage Income Fund, or PCI, but they were reorganized into PIMCO Dynamic Fund, or PDI, alongside PIMCO Income Opportunity Fund, or PKO, on December 10, 2021. I've held the stock too for a very long time, ever since I had it in TD Ameritrade. Honestly, I rarely take a look at this stock because it kept paying me dividends consistently. I think one of the reasons why a lot of dividend investors shy away from this one is because there hasn't been any growth to its dividends for the past 6 years. But last year I added a small amount to it, and I'm thinking I'm also gonna do that this year. And the fifth one on my list is Realty Income Corporation, or ticker symbol O. So this is one of the core REITs in my dividend portfolio for its growing dividends. They have been performing really well throughout 2021, and that made it harder for me to actually buy more of O because, you know, stock prices went up. But in case that O becomes really expensive, I was thinking I would look into National Retail Properties, or NNN, as a backup REIT that rivals O. The sixth one on my list is Stag Industrial, or ticker symbol STAG, or STAG. This one is another big REIT mover throughout 2021, and the gains I've made from this one stock has been quite amazing. But because the gain or the growth of this stock has been amazing, you know, it made it harder for me to actually buy more of this stock because investors have been loading up on Stag. Their dividends stayed at 12.08 cents per share last year, but for 2022 they increased it to 12.17 cents per share. So Stag dipped to around $39 in October, but I had not planned to buy more of it since I was really focused on other areas. $39 is quite a missed opportunity right there, seeing as the stock keeps on growing even till now. But I was thinking to myself, you know what, that is totally okay. I'm just going to let the stock grow by itself and then collect dividends. So the seventh stock that remained on my portfolio since 2021 is Schwab US REIT ETF, ticker symbol SCHH. So SCHH is the first and only REIT ETF in my dividend portfolio, and I honestly have not been paying too much attention to this stock ever since I bought it. When I actually bought this one, all I ever thought was that I needed a safe REIT play in case any individual stock that I own would crash. And there you go, I found SCHH while I was doing my own research. And even though it's really performing well right now, I haven't been adding to it as much as I'd like, similar to Stag, because of how the price appreciation has been affecting my buying decisions. While I had 7 stocks remain in my portfolio going into 2022, I had 3 stocks that left my portfolio last year. And the first stock that left my portfolio last year was AGNC Investment Corp, ticker symbol AGNC. This is one of the 2 mortgage REITs that I decided to let go last year. It took me a while to decide and close this position because I believe that I was too attached to the length of time I've held this stock. I was too blinded to the fact that even though they were paying a 9% dividend yield, the dividends they were paying out to the shareholders were decreasing at least almost every year. So there you go, guys. That is a lesson for you, to not always trust the dividend yield. It's called the dividend yield trap. The second stock that left my portfolio is called Gladstone Land Corporation, ticker symbol LAND. When I purchased LAND, it was on the thought that it was made by the same company with good, which is Gladstone. I just bought it without a thought, let it stay in my dividend portfolio, and collected some dividends. But as I became a more conscious dividend investor, I knew that I really needed to let go of some positions in order to free up some cash. LAND was one of those stocks that I really needed to let go. Plus, they were also paying out very low dividends, which was totally not worth it. The last one, or the third one, that I let go last year was New Residential Investment Corporation, ticker symbol NRZ. So this was the second mortgage REIT I decided to let go last year alongside AGNC. Well, if you actually compare the two, AGNC and NRZ, this one, NRZ, is actually the better choice. While NRZ was the better choice between the two, I thought to myself that there must be another M REIT out there that performs better than AGNC and NRZ. And luckily, I actually found that replacement stock, which I will talk about later on. Plus, I also decided to let go of NRZ because they cut their dividends from 50 cents in 2019 to 25 cents in 2021. So there you go, guys. Those are the 3 stocks that left my portfolio in 2021. So if they left, there must be some new stocks that got added to my portfolio, and the answer is yes, there are 8 new ones that have been added in 2021. So let's talk about the first one, and that is Arbor Realty Trust Inc., or ABR. So this is the replacement stock that I found to be better than AGNC and NRZ. It's a quarterly dividend stock that has been growing their dividends for the past 9 years. Obviously, I'm not gonna go into full detail about this stock, but I can tell you that it's been a great choice for me. Instead of looking or monitoring 2 M REITs, I just need to watch out for this one. The second one that got added to my portfolio is AbbVie Inc., or ABBV. Getting this stock was one of my many attempts to start diversifying my portfolio in 2021. I've been hearing about ABBV as a very good dividend stock in the healthcare sector, so I had to take a look at it. The stock is priced above the 100, so it was a hard purchase given the monthly contributions I make. I rarely purchase dividend stocks above $50, much less $100. It was a big leap though, but it proved to be the right move because ever since I bought ABBV, their stock price has soared already. The third one on my list is Enterprise Product Partners LP, or EPD. This is the first stock in my diversification goal that is focused on the energy sector. I've seen this in other dividend investors' portfolios, so I had to look at it as well. I wanted to have a little bit more exposure into other sectors, so this stock was actually a good introduction for me. The stock kept moving sideways throughout 2021, so I guess that's why a lot of investors shied away from it. Luckily though, this was a new purchase or a new stock in my portfolio, so I kind of like avoided buying it at its all-time high of $30. So I got it really cheap, probably around $20 to $23. The fourth one that got added to my portfolio is Lumet Finance Trust Incorporated, or LFT. It's one of the newest stock in my portfolio that is focused in the financials sector. I found this while doing a little bit of research on dividend stocks that I can afford, and there you go, I found LFT. They were doing really well around the middle of 2021, and they were kind of like staying in the $4 levels, but right now they have gone down to like, you know, low $3, and I'm just gonna keep it that way for now. I'm going to take a look at this again in the middle of the year, and if they perform well, then I'm going to keep them and maybe add more. If not, I might just entirely close the position. So the next one on my list is Main Street Capital Corporation, ticker symbol MAIN. This is one of the financial dividend stocks that I really love to own. I used to own this one back before I was really serious with dividend investing. I sold it all because I needed some cash to start trading, you know, penny stocks, which actually worked out quite well for some time, but I got tired of it. So here I was being reintroduced to MAIN in 2021. I really love the growth that they experienced last year, so much so that it made it harder for me to buy more of the stock. So at the moment, I'm pausing buying financials, but if there is a door to get in below $40, I would do so. And the next one on my list is New York Community Bancorp Incorporated, or ticker symbol NYCB. This is the last dividend stock in the financial sector that I bought in 2021. This performed in the opposite way from LFT, dipping to $11 mid-2021 to now at $13. From what I learned, NYCB wasn't really performing well for the past 10 years, but in 2021, the merger with Flagstar would help them transition from being a community bank to a real bank. This basically means that they could expand their business and diversify their offerings, resulting in increased revenue for them and dividends to shareholders. The next one on my list is Orion Office REIT Incorporated, ticker symbol ONL. I got the stock as a result of Realty Income's acquisition of VREIT or VREIT. ONL is a REIT focused on owning, acquiring, and managing a portfolio of mission-critical and headquarter office buildings. For every 10 shares of O that you held, you would get 1 share of ONL, which is pretty much what I got. They don't have any declared dividends yet since the company is very new, and you could say that the lack of history is one of the main reasons why a lot of investors who got them dumped them right away. The stock price started at around $21, and since people were just selling them, you know, it fell. I plan to keep this stock for now and see where it goes. Since it's a free stock, you know, there's really nothing to lose here. The last stock I added to my portfolio is called Store Capital Corporation, ticker symbol STOR. So this is another new REIT that I've added to my portfolio, and I'm quite bullish on this one. The main reason for me being bullish on this one is because of their focus on looking for tenants that have at least 3 payment sources. Having that sort of requirement for their tenants sort of means that those tenants are more likely to pay their rents on time. I also believe in the e-commerce boom, which helps drive stores' tenants' profits, making it a lot easier for them to, you know, pay the rent. So it made sense for me to look for stock that would benefit from that, and there you go, I found Store. So those are the stocks that remained in my portfolio, left my portfolio, and also got added to my portfolio in 2021. So now let's take a look at what are my goals for this portfolio in 2022. There are a couple of things I have in mind for this dividend portfolio. As mentioned in my 2022 financial goals video, I actually aim to have this dividend portfolio reach a value of $10,000 or more. This is a very good amount to strive for because it's not an exaggerated level. It's a very workable one given my current financial standing. It will also be achievable because I am increasing my monthly contributions to $200 every month. So if you take that into account, by the end of the year, I would have $2,400 in contributions. Plus, I have the dividends that I would earn for 2022 as well. Another plan that I have is to increase my REIT holdings in order to combat inflation and take advantage of REIT rallies right now. I like that most REITs actually pay in a monthly basis. That just means that I can reinvest those dividends back to my portfolio and then grow it even faster. But in the event that REITs become too expensive and I can't afford them anymore, I will focus on other sectors instead. Some of the sectors I've considered after REITs are communications, financials, and also consumer staples. So the long-term goal for this portfolio is to grow it into a true passive source of income that could take care of my personal expenses. The only challenge I can think of in growing this is if I stop making my monthly contributions. I don't really have any control on what the market does or when these stocks would cut their dividends or stop their dividend payments, so I'm not gonna let that worry me at all. I'm just going to keep investing in my portfolio, see it grow, and then collect those dividend paychecks. And there you go, guys. That's all I got for you. Thank you so much for watching the entire video. If you have any suggestions for my dividend portfolio, if you have any comments regarding each stocks, Let me know in the comments below, and if you have any questions, I will answer them to the best of my abilities. If you want content just like this one, or if you want to follow along my journey, please subscribe to the channel because that will really help. Like this video and also share this video. And if you are on Instagram, please add me there as a friend at DailyDread so that we can chat, collaborate, and maybe even exchange some ideas. Thank you again so much for watching the entire video. I hope you find it very helpful. I hope you have a wonderful day, and I will see you in the next one. Bye!